Welcome back. The Canadian dollar faced volatility in 2025, but is there a light at the end of the tunnel when we look to 2026? For more, let's bring in Adam Button, Chief Currency Analyst for investingLive, and you're in studio with us. Thanks so much for coming in.
It's great to be here. Happy New Year.
Happy New Year to you as well. So to start off the first trading day of 2026, the Canadian dollar was down a bit compared to the US dollar. What do you make of that?
Yeah, I mean, it's early days here right now. We're trying not to draw any conclusions about the move so far. There was a bit of good news sort of in the pre-holiday period. We saw the U.S. sort of outline its position on the USMCA agreement, and it looks like they want to stay in it. Now, it's tough to take any of the signals from that, but that's going to be the big trading theme of 2026 is what's going to happen with the free trade agreement. And, you know, they're very positive about it. They want concessions on dairy, a number of other things, but it's nothing that's really critical to the Canadian economy. And I think a lot of this year is going to be a lot of noise around that.
Yeah.
And then maybe by the end of the year, we get to some certainty, which would be wonderful for the Canadian dollar.
Well, and that's optimistic as well, and good to hear, right? Because there was at one point where Washington, or Donald Trump at least, was saying that they wanted to do away with the free trade agreement completely, which is kind of scary news. So, I mean, yeah.
This is something we're struggling with, you know, as a trader, because you get these headlines from Trump saying we're going to blow the whole thing up.
Right.
And then you have Jameson Greer, who is the trade representative, telling Congress in a closed-door hearing, and I think they wanted to do it to close doors because they didn't want to announce that they want to stay in. And they're saying, listen, all the comments we got about this were positive. Very few people want to blow this up. Yes, there's some grievances, but maybe we can negotiate that. Then you go into negotiations with Donald Trump, and he likes to throw a hand grenade into it over and over. So you're off balance. But I think the market has largely figured out that, you know, there's what he says and there's what he's going to do. Again, we went through this with steel and aluminum a few months ago where it looked like a deal was right at the finish line, and now we're back to the start. So it's tough. Not just as a trader or an investor in the Canadian dollar, but for people who are planning businesses and who want to invest. And I think there's this, you know, this dam that's being built up right now of investment dollars that wants to go to work in Canada, but just needs some certainty. And I think it's going to take a little while yet.
And that's what so many analysts say, right? Is that uncertainty is almost worse than a bad deal because you just don't know what's going to happen. Like, if we're talking about this free trade agreement, and how important is it that we get a good deal for Canada? Like, how much does Canada's dollar hinge
You know,
on that?
and you're looking at some of the U.S. grievances right now. So you talk about dairy. Well, what is dairy as a part of Canada's economy? It's unfortunately, it's everything if you're a dairy farmer, but if you're not, it's very small. Even steel and aluminum, you know, they're pretty peripheral. Eventually, though, these things do add up. You know, sentiment is weighing. But the big surprise, I would say, of 2025 is despite terrible sentiment, a poor housing market, the Canadian consumer kept spending. You know, the numbers month after month were strong. And it just shows that people, I don't think, tapped too hard into the housing wealth when on the way up. And on the way down, it doesn't seem to have bothered consumers that, you know, their home equities might be down 10, 15, 20% in parts of the country. So I think we expect that to continue at this point. There's a bit of a mortgage renewal wave, and I think housing is going to stay a little bit in the dumps. But if we can get through this year, I think you can draw a bottom under that. And, you know, if you see bank stocks, they really rallied in the second half of the year, and they started to price this in, that it's not going to be American housing collapse redux in Canada. So there's a lot of good news under the surface in Canada. We had a 5% gain in the Canadian dollar last year. I think we can do the same this year.
Is there anything else that is really going to factor into how the Canadian dollar does this year? Like you mentioned, the housing situation Canada's in, the free trade agreement, Bank of Canada decisions maybe. Like, is there anything else that really could change what the Canadian dollar does?
Yeah, just in the next few weeks, we're watching that U.S. Supreme Court decision on tariffs. So that could come at any time, right? And if they take away Trump's tariff threat, it's a whole new ball game. Now, these things, they have a window until June to announce it. But they only give 1 to 3 days notice. This is probably going to be a January or February announcement. That really sets the table for the rest of the year. And then if you circle back to Canada, well, it's the commodity picture. You know, we have a new government in. It's a lot more commodity positive. It was a really good year for commodities in general. I think a lot of people would love to invest in gold mines in Canada right now. We're going to clarify the investment picture. Oil's probably going to bottom at some point this year after a terrible year. But again, if you look at oil stocks, they did very well in the second half of the year, despite a terrible year for oil. And I think that says that people are getting a little more optimistic on these long-lived assets in Canada that are really high quality. And it's a stable jurisdiction. You're going to have a liberal government or a conservative government for the next 10 years.
At least.
And I think if you look at the investment landscape, even the United States, a lot could happen there. Britain, a lot could happen. A lot of jurisdictions, there's huge political uncertainty, and I think it's not really here in Canada right now, and that will eventually be reflected.
Is it given commodities, because you were talking about commodities, like that run we saw with silver and gold, that usually, correct me if I'm wrong, means that people are a little less sure about their currency. Is that kind of, do you agree with that, or what do you think we might see in 2026?
Well, I think that, I've been pretty optimistic, but if you look at the U.S. political situation, it's untenable. We can't keep going like this, and that's a big reason that gold rallied so well. The U.S. dollar is at the center of the global system. It was the worst performing major currency last year. It really kicked off in August when they fired the head of the Bureau of Labor Statistics. And now we have the Supreme Court decision. And I think that's pivotal for gold. If we say no more tariffs, then we have someone finally saying no to Trump. And then we can say, okay, you can hold US dollars again, the checks and balances are there. Maybe the Fed decision as well, the Fed leader. We get someone there who will push back. But if it's just the Supreme Court rubber stamping tariffs, somebody's going to cut rates to zero, you're going to have a lot of problems. And gold will go maybe even double from where it is now.
So interesting. Good to have you in. Thanks so much for coming in studio.
Thanks
Appreciate
a
your
lot.
time. That was Adam Button, Chief Currency Analyst for investingLive.